Well, joining us now to walk through what investors have been buying and selling during these turbulent times is Gemma Dale from nabtrade. Gemma, great to have you in this week. What a week it's been. There was some kind of positivity out there, but finishing the week on a low. So what have traders been putting in their portfolios?
Yeah, interestingly enough, it hasn't been a putting in kind of week for us. It's been a taking out kind of week. And it's because the materials have been performing so strongly, and a lot of our investors are buying hard last year. BHP around $35 was just an incredibly strong buy for us. So when clearly $50 was a number everyone had in their alerts, yesterday 91% sell, which is unheard of for a stock of that size. It has to do something quite extraordinary for that to happen. But clearly $50 was the magic number, and we saw very aggressive selling. And we've kind of seen trimming through the week. Fortescue, always a favorite, obviously, and it's a trading stock, so you don't get a strong directional trend. It's a daily thing rather than a long-term thing with Fortescue in terms of how our traders treat it. But the volumes are still really strong. Obviously, the iron ore price is rocketing, and the guys are loving that again, which is not unusual for them. It's been 12 months now, and they're still loving it. It's fairly mixed in trade, but a slight bias on the sell side because it's holding up relatively well. And again, that was one that they were buying so aggressively around sort of $14, $15, $16 at $19, nearly 20. They're doing really nicely and enjoying that a bit. Rio's being sold. And then when you move into the energy side, that's getting absolutely, we're calling it trimmed, right? For anyone who's holding it, they are taking the opportunity to get out at these prices. And just looking at the numbers on the screen a little earlier, you can see that they will have been happy about what they were doing yesterday, which is what a lot of these numbers are coming from. There was heavy trimming across the board. Santos and Woodside, Whitehaven coal as well, obviously. Coal prices rallying in this environment, and people happy to get rid of that too. So it's been really interesting. Most of our investors are seeing this as an opportunity to trim positions they're holding and then think perhaps about rotating into something else, but much less aggressive buying than selling.
Yeah, maybe some cash on the sidelines as we head into that weekend. A lot of uncertainty around there. What about the financials? How are they faring?
Yeah, the financials are interesting. I mean, they're always a core part of investors' portfolios when you look at the retail base that we have, and they clearly want to continue holding financials. The dividends are just far too attractive to turn down, particularly for our more mature investors, the self-managed super funds and so on, where they're heavily dependent on that yield to meet lifestyle expenses, right? It's not insignificant. And so we're seeing buying in financials again. That's not unusual in this kind of environment when there's a tiny bit of a pullback in financials. We will see buying. It's only a tiny pullback. The interesting thing is Westpac is still the pick. It has been the pick for quite a while, and that does not seem to be changing. And NAB is quite mixed. So it was up over $30. It's back at $28 something now. And people aren't quite sure which way it's going, right? So they're quite mixed on NAB, but they're very keen on Westpac. They've been picking it up since around the $20 mark, and they like it from there.
What about some of those stocks that have had a bit of a rough time of it? I can think of Zip, I can think of Magellan. Any kind of bottom picking there?
Yeah, this is really interesting. Magellan in particular surprises me because we didn't have anyone who was clearly in the run-up, right? So that name didn't come up in our numbers at all when it was running hard. It wasn't a favourite. It was just one that our investors didn't touch. If they were going to look at Magellan, they would be investing in the funds or the ETFs. They would not be buying the actual fund manager itself. They wouldn't be buying the company. And yet, it's obviously been absolutely hammered over the last 12 months. It keeps coming off. The news is consistently awful. And it seems to have found some buyers, right? And they keep popping up as the news gets worse and the share price falls, which surprises me greatly. That is unusual for our guys to have not been attached to something and then be getting on it. Zip, on the other hand, has been a hugely popular stock, right, for several years. It was a real trading stock all of last year, so it was heavily bought during the COVID period when it got absolutely beaten to pieces along with Afterpay and the rest of the sector. Things came roaring out of COVID. It was a great buy for a lot of our guys then. And then it was a trading stock last year, and suddenly there's a bit of interest again. So it's really in the bargain hunting category for our guys.
What are we seeing internationally, Gemma?
Yeah, this one, it's always Tesla, right? It's Tesla and daylight when we look at international, and yet there wasn't a lot of buying in Tesla overnight. There's a little pop in the stock. Yeah, there's quite a sort of a broad-reaching thematic around electric vehicles that we've known about for a long time, but with the absolute horrors in Ukraine and the concerns about energy security. The idea of getting off fossil fuels altogether and moving on to electric vehicles is very attractive to a lot of people. A lot of investors who've been thinking about that thematic are considering rotating into it in this environment. So we did see a lot of core lithium during the week, which will not surprise anyone, and Pilbara Minerals as well. What is not as obvious, I guess, is that it wasn't Tesla they were buying. They've been buying Rivian, and they've been buying Lucid Group, that's the sort of luxury vehicle manufacturer in the EV space, and NIO, which is the Chinese manufacturer. I mean, these ones are far more speculative than Tesla, which is very much the leader in this space. Despite many, many challenges as a business, it's by far the favorite. But at the moment, they're looking at the specky ones in the space as well. They want to get on board.
What about some of those big tech names like Google, like Apple, Microsoft? Any interest there?
Look, they're consistently in the numbers, so it's not like they disappear entirely, but it is quite fascinating how minuscule the appetite is really compared to something like Tesla. So when people go offshore, they go for these really strong thematics. Enphase Energy, which I talked about not so long ago with you guys, makes microinverters among other things for solar panels, also in the energy efficiency space and the clean energy kind of transition space. That's popped back into the numbers. The big tech names, they're there. They're consistent, but they're not anywhere near as exciting to our investors as the renewable space, which is quite fascinating. It's the exact opposite of how they invest in Australia, right? In Australia, we're looking at all the materials and the energy stocks. Internationally, it's all about renewables, and that shift has been going on for maybe 3 years now.
What about the ETF play? Are there any kind of thematics out there that they're trying to get a hold of and just want to play a general market play?
ETFs tend to surprise people when I talk about what we see. Probably the most important thing is ETFs are a meaningful part of the base now, and they are a meaningful part of trading volumes as well as holdings. So they were at 4% 2 to 3 years ago. They're now 9 to 10% of total holdings. It is something that people understand as an opportunity. So when they are looking to buy broad market exposure, as you say, they'll just buy an ETF. They're very happy to do that. They understand what they're doing, and it's consistently part of what we see investors doing with strategy. If the market sells off, if we have a really down day, and people, particularly if the SPY is heavily down and pointing down and people know it's coming, we will see very aggressive buying in ETFs, but it's almost exclusively the ASX 200. There's not a lot of thematic ETF buying. There is some thematic ETF buying in the US, but they're very specific and it's a very small number of traders. In Australia, people buy the ASX 200 first, and they buy very large proportions of the ASX 200, particularly when you look across the manufacturers. So if you look across Vanguard and the various others, VAS is by far the biggest, interestingly enough. That's the one they go for first. But when you aggregate them, they are streets ahead of anything like the S&P 500, for example, or the NASDAQ.